Hello everyone, welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 9 from the book Crypto Swing Trading by Jide George. It has been created with the help of AI. The chapter is titled Common Mistakes and How to Avoid Them. You can read the original post at samfury.com.
Hey everyone, welcome back for another deep dive. You're here because you want to level up your crypto swing trading game.
That's right.
And more importantly, you want to dodge those nasty pitfalls that can totally wreck your portfolio. So we're going to unpack Chapter 9 of Crypto Swing Trading by Jide George.
It's a good one.
And this chapter is all about mistakes traders make. So are you ready to trade smarter and protect your crypto capital?
Let's do it.
Awesome.
I think a lot of people can relate to that. And Jide George, in this chapter, he goes beyond just listing out these mistakes. He really digs into the psychology behind them.
Yeah.
And it's really about understanding how our emotions can trip us up.
Yeah.
Especially in a fast-paced market like crypto.
Absolutely. I mean, it is so easy to get, especially if you're new, to get caught up in the hype and make impulsive moves.
Right.
Speaking of impulsive moves, let's talk about the first mistake.
Mm.
Over trading. It's like death by 1,000 cuts. You might snag these small wins here and there, but those constant trading fees and the risk of missing out on bigger gains because you're already in a position, it's just going to chip away at your portfolio.
Yeah, and I think especially, like you were saying, the 24/7 nature of the crypto market, right?
Oh, yeah.
It's nonstop. You're constantly bombarded with price movements and news and people's opinions, and so it can feel like if you're not always in a trade,
always in on something,
you're missing out, right? But a lot of times that fear of missing out,
the FOMO.
that FOMO,
right,
that is actually what pushes people to overtrade.
Totally.
So you have to be really disciplined and stick to your plan.
So true. I mean, sometimes the best move is actually no move at all. Speaking of letting emotions get the best of us, let's talk about a mistake that is just a classic trap. Revenge trading.
Okay.
So imagine this. You just took a loss. And you are feeling that sting. What do? You jump right back into another trade, guns blazing, determined to win it all back in one go.
Yeah.
Have you ever felt that?
I think anyone who's traded, any asset, especially if you're newer, has definitely had that feeling at some point.
Yeah, it's totally a natural reaction. But in trading, emotional decision-making, I mean, that can just be devastating.
Absolutely.
So instead of chasing revenge, take a step back.
Yeah.
Analyze that losing trade. Was it a bad entry point?
Exactly.
Did the market shift unexpectedly? Could you have identified maybe like a bearish signal, like a head and shoulders pattern that you totally missed?
Right.
Learning from those losses, that's how you actually improve.
Right. That's how you get better. And I think that's something that a lot of people, especially newer people, they don't always do,
Probably.
They just want to, they want to forget about the losses,
Get back in.
And just get right back in and
turn those losses into lessons, right?
Exactly.
Yeah. Okay, let's tackle a mistake that is less about emotion and more about protecting yourself, managing risk. I think, we all dream of those massive gains.
Right.
The reality is no trade is a sure thing.
Right. No trade is a sure thing. It's really important to protect yourself on the downside.
Yeah.
And it's like wearing a helmet when you're cycling. Right. You hope you never need it, but you are very, very grateful when you do. And George, one of the things he talks about is never risking more than 1% to 2% of your capital on a single trade.
Right. So even if it goes south,
exactly,
it's not going to wipe you out.
It's not going to wipe out your whole portfolio.
Right. And on top of that, thinking about your risk-reward ratio, you want it to be at least 2 to 1. Meaning your potential profit should be at least double your potential loss. So if you're risking $100, you're aiming for a profit of at least $200.
Right. And, there might be times where you adjust that ratio based on, how confident you are in a particular trade.
Okay.
But 2 to 1's a really good starting point. It's about making sure that over the long run, your wins are outweighing your losses.
Makes total sense. Okay, moving on to another mistake that can really sneak up on you. Having favorites. I know I've fallen into this trap before. You find a project that you just love.
Yeah.
You believe in the team. Maybe you even made some good money on it in the past.
Right.
And it's so easy to get
Oh, yeah.
Emotionally attached.
Right. And that emotional attachment, it can lead to biased decision making.
Oh, for sure.
Right. You might hold on to a losing position for too long, hoping it'll bounce back. Or you might enter trades based on, emotion rather than a solid setup.
Right.
Remember, every coin is a potential opportunity.
Right.
But also a potential risk.
It's true. It's true. So detach and analyze. Got it.
Exactly.
Finally, let's talk about going full tech. We live in a world of, data, charts, indicators.
Yeah.
It's easy to get swept up in technical analysis.
Right. Yeah. Technical analysis, it's a powerful tool.
It is, yeah.
It's only one part of the equation, You need to understand the fundamentals, too. What problem is this project trying to solve?
Yeah.
What's the team's track record? How does it fit into the overall market landscape?
Yeah.
Combining technical analysis with that solid fundamental research.
Right.
That's what gives you a truly informed perspective.
Yeah, absolutely. Okay, so we covered 5 key mistakes to avoid. Overtrading, revenge trading, neglecting risk management, getting emotionally attached to projects, and relying solely on technical analysis. Understanding these pitfalls can really make a difference in your trading journey.
Absolutely. And as you navigate the crypto markets, remember this. All of these mistakes, they have one thing in common. They often stem from our emotions.
Totally.
So pay attention to your emotional state. Are you feeling impulsive? Are you feeling fearful?
Yeah.
Are you feeling overconfident? Being self-aware can really help you avoid those emotional traps and trade with a clearer head.
That's such a good point. Knowing yourself is just as crucial as knowing the markets. Well, that wraps up our deep dive into crypto swing trading mistakes. So, armed with this knowledge, you're ready to ride those waves, but remember, stay curious, keep learning, and never stop refining your approach.
That's it.
And we'll catch you in the next deep dive.
See you later.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.